Hello everybody, this is Emmanuel Derival for the English channel Finances with Emmanuel Derival. Topic of today, different type of life insurance and which one is better. Let's go! What are the different type of life insurance? They are classified in three different types. First, you got the whole life. Second, you got the term life. And third, you have the universal life. Let's start with the term life. Term life is a contract made between an insurance company and you, the client, for a period of time where in that contract, the company said, hey, you give me a certain amount of money every month and I will cover you with a death benefit, but that contract lasts for only a period of time. The second type is the whole life insurance. The whole life insurance is practically the same concept. However, the contract lasts forever until you die. That means you pay me a certain amount of money every month, and until you die, anytime you die, I will give X amount of money as death benefit. That's the second type, that's the whole life. And there's a third one, that's the universal life. The universal life is a contract where there's a guarantee for a period of time, but the policy goes on the market at some point. At some point, the policy need to perform. The whole life and the universal life, both they have a death benefits plus an investment part called cash value. What is a whole life insurance? The word whole mean entire. If term life mean period of time or period of time during your life, whole life mean your entire life. That means whole life insurance is a contract made between a carrier or an insurance company and you, the client, all the way until you die. That means as long as you are alive, the policy stays. During that contract, the insurance company tells you, you give me a fixed amount of money regularly and I promise to give you a death benefits, a certain amount of money when something happened to you. That is a whole life insurance because the contract stays there as long as you live. Once you die, the contract ends and the company pays the death benefits. That's a whole life insurance. This is the only type of policy that is guaranteed, so your family will have a death benefit 100% warranty all the way until you die. Whether term or universal life, there's a possibility for your family not to have the money. But for a whole life, it is guaranteed 100% since the policy lasts all the way until you die. So it is guaranteed 100% that your family will get this money. A lot of people love it. However, there's also inconvenience. There's good side, there's bad side about whole life insurance. That's gonna be another video. Before we go further, let's take a pause to subscribe, like, and share. If you like me, give me the love. Let's go. What is term life insurance? The word term means period of time. That means a term life insurance is a contract made between an insurance company and you, the client, for a period of time. In the market, you can find multiple periods. You got term of 1 year, term of 2 years, 5, 7, 10, 15, 20, 25, and 30 years. And I also know a company that claim they have a 35 years term insurance. During that term, the carrier or the insurance company said, you give me this X amount of money called premium. This money you can give it monthly, semi-annually, quarterly, or annually. And when something happened to you, the company promised that they will give you a death benefits, which is a certain amount of money just to take care of your family or whatever reason you take life insurance for, so to take care of that thing. So that is a term insurance company. But the contract lasts only for that period of time. After that period of time, you and the company, you don't have contract no more. You don't owe the company and the company do not owe you. You cannot go and claim your money back and the company is not gonna reimburse you your money. So that is a term. Some people like it, some people do not like it. But let me tell you something. There's advantages, there's inconvenient. In another video, I will present you all the difference, the good side and the bad side of a term insurance company. What is a universal life insurance? A universal life insurance is a contract between an insurance company and yourself. Well, the insurance company, like the whole life, said, okay, you give me a certain amount of money and I will give you a death benefit when something happens. However, the difference is, if for the term life and the whole life, everything is fixed, the amount that you're paying is fixed, the amount that you're getting is fixed. In a universal life, everything is diverse. Like they will say universal. Everything can be as big as the universe. Whether you talk about what you're paying or whether you consider what you're getting, everything can change. It's a variable policy. That's why when you have a policy, a universal life insurance policy in your hands, the cover, you always see, if it's a term life, you see term life. If it's a whole life, you see whole life. But when it's a universal life, most of the time you see flexible premium, adjustable life insurance, or flexible premium, variable life insurance policy. Because everything is variable, everything is flexible. It's nice, but if you don't understand it, you may lose it because you're playing with a bunch of variables. Now, the beauty of universal life, you may start your policy with 100,000 death benefits, and then when you die, you end with whatever amount, 150, 200, whatever amount. You can end it having $1 million based on the way the policy is designed. In a whole life, there's two parts. You got a death benefits plus an investment part. The investment part is with a fixed interest rate. Universal life, the investment part, there's also two parts, a death benefits and an investment part. But the investment part is variable according to the market. It depends what type of life insurance of universal you have. It depends of type of universal you have, because the investment can be based on a stock or an index of a stock. So this is a very complicated life policy. Not everybody can have it. Universal life is not for everyone. Difference between whole life insurance and universal life insurance. Both policies, they are permanent policies. They're permanent because they can last all your lifetime. Both of them, they have a death benefits and an investment part. Whole life insurance, however, everything is fixed and guaranteed. Universal life insurance, nothing is fixed and it's not 100% guarantee. In a whole life insurance, you pay a fixed amount as premium, as payment every single month. You got the cost and the fees, they're already set up and fixed. And also what you're getting paid when you die, it's already fixed. In a universal life, the premium that you're paying is flexible. At some point, you may have to pay more, and the same way you can take a break for months or years, not paying nothing, and the policy is still there. The costs and the fees in the policies, they also variable, and they go most of the time higher as you aging. The death benefits also variable. Also, the interest rate in a whole life, that fixed. In a universal life, the interest rate is variable. Usually that based on a stock or on an index of a stock. All these are differences between whole life insurance and universal life insurance. So if you like warranty, you go whole life. If you like risky but take chance to have way more than you expecting, you go universal life. What type of life insurance is better? My answer, none or all of them. The best type of life insurance is the one that pays you when something happens in your life. That's what I can say. All of them, they are good, they are bad, because the best one is the one that fits you for now. Let's say if you take a life insurance policy and that doesn't fit your situation right now, it's not good. But if everything fits your situation right now, that's the best one for you. So not all life insurance is for everybody. Each type is for somebody. It depends where you stand in the pyramid of life. Your financial. How is your financial? what is the constitution of your family right now, where exactly you stand, what are your goals in life. All of these questions, they will determine what best policy for you. It can be a term, it can be a whole life, and it can be a universal life. There's no magic formula. That's why you need to trust your agent. Your agent need to go over a bunch of questions so he can figure out the best policy for you. If you like my content, please share, follow. If you have questions, put them in the comment, email me, text me, or call me. See you next time.